Hi, Seamus fan again here, and welcome to the bonus number 3, which is the Fibonacci trading secrets. It's a complete course that I'm going to cover both basic and important Fibonacci tools that I like to use along with binary option smart box system, and those two tools are the Fibonacci retracement tool and the second one, which is the Fibonacci extension tool. Now the Fibonacci retracement tool, I use it to measure the price or correction level of a previous trend, and also it enables me to identify price reversal points. So for example, when I have a downtrend, I get the Fibonacci retracement tool and place it from the top to the bottom, and then I can measure the price correction of the previous downtrend, and when it reaches or hits one of the high impact levels, I wait for a reversal to happen there and wait for an arrow to pop up and a valid breakout theory, and then I continue to go in this and I take my trade and of a reversal here. And the second Fibonacci extension tool, I use it to predict where the price is heading to, and also it enables me to identify the target point of the next market move. For example, here I have an uptrend, and that uptrend has made a correction to the downside, and then it has started to go up again. It has continued in a bullish market. So I get the Fibonacci extension tool and place it from the top to the bottom of that uptrend and see where the price is heading to after it has made the correction, and look for those high impact levels where the price will reach and then reverses down again. So this is how I mainly use those two tools, and they are very important and useful in your trading, even if you have 100% accurate winning rate system. So here I'm going to just give you a brief introduction to the high impact levels, or the best Fibonacci trading levels. For the retracement tool, the best trading levels are the 23 level, the 380, 38 level, 50, 61, 78 and 88 level, and I will be covering deeply about these levels in the upcoming few minutes. And for the extension tool, the high or the best Fibonacci trading levels for the extension tool are the 127, the 161 and 261 levels. Now I know that you are wondering where to find the Fibonacci retracement and extension tool on MT4, and I will just jump onto my MetaTrader 4 right now and show you where to find these two tools. So this is my MetaTrader 4 here, and this is a USD CHF 5-minute chart, and the way by default you will get the Fibonacci retracement tool on the taskbar here, or the tools bar here for MetaTrader 4. Just head over this section here where it shows those icons here for the trend lines, horizontal lines and the crosshair, and click, you find that's the icon here with an F, and it says when you hover over it, it will just show you draw Fibonacci retracement, and you grab it and place it into your chart. Now for example, we have that uptrend right here, so I take it from the bottom, from the bottom to the top. Let me just change the color so it will be more clear. And now I am able to measure the price correction of this uptrend right here, and it has made a 50% retracement or correction. According to the extension tool, unfortunately there is no extension tool available by default here on MetaTrader 4, and many people try to make a custom one, to code a custom one, and it really doesn't work, but it's extremely rubbish, and no one has been successful to code one. So we use the Fibonacci retracement tool here as an alternative, and the way you can use it is very basic and simple. You just grab the Fibonacci retracement tool and for example, we have this downtrend, then correction, then downtrend, and here, as I said, we use the Fibonacci extension to see to look for where the price or where the market is heading to, and then reverses it up or down. So here I'm going to get the retracement tool and grab it from the bottom to the upside to see where the extension is going to. By default, you will get only for the extension levels, by default on the Fibonacci retracement tool, you will get only the 161 level, and the 127 level you will not get it, because you will not, you just need to put it manually here. And in the next few minutes I will show you how to do this manually as well. And here we are able here to use the retracement tool as an extension tool, and if you see it, the price has reached the 127 level, but it did not turn back up. But here it's already on the 161 level, and we wait for price reversal and wait for another for the banner option smart box system or arrow to pop up, and then we take and confirm with the breakout theory, and then we take our trade. So this is how it works basically. For the uptrend, it's just something like this. You grab the Fibonacci retracement tool from the top to the bottom, and you see it has extended. It has the extension has went over 127 Fibonacci level, and then retraced back for a while, then came back up again. And here it has, I think those are weird news here, the Michigan Consumer Index here, so things are a bit crazy. So this is how to find the retracement, the Fibonacci retracement and extension tool. We move to the next step, which is how to use the Fibonacci retracement tool on a bullish and a bearish market. So I will just dive into explaining how to use the Fibonacci retracement to measure a bullish trend correction and a bearish trend correction. Okay, so let me just go back to my so here again we're on my MetaTrader 4 here. So the first thing we want to do is I have an uptrend and or a bullish trend, and I want to measure the retracement of this uptrend. If we take this into consideration, so let's just take the M15 chart for example, and we go to that uptrend. You notice that uptrend right here, it's an uptrend, right? It's a clear uptrend. So I will grab my Fibonacci retracement tool and take it from the bottom to the top to measure this uptrend correction. We take the Fibonacci tool from the bottom to the top, and we take the tails or the wicks here into consideration. We don't take the Fibonacci retracement tool from the body for the opening price of the candle body and the closing price of a candlestick body. So we take the wicks or the tails into consideration. Okay, and now I took the Fibonacci level from the bottom to the top to measure an uptrend retracement. And if we notice here, we already have the retracement on the 61.8 Fibonacci level, and this is a key level for price reversal. So if you notice here, we are already seeing a rejection of the price to the downside, to the upside. So I think when this candle closes and we find when we keep getting that body, we may take that into consideration, as it shows a doji, and a doji candlestick pattern is for means that the is meant for reversal, price reversal, whether it comes on the upside or to the downside, it means price reversal. So anyways, we're not interested in candlestick patterns here, and we're only interested in how to apply the Fibonacci retracement tool. Now we move to let's just find a downtrend. I already see one. So let's take the 5-minute charts for more reliability here. And that's a downtrend, a clear strictly downtrend here for 300 pips. We take it doesn't matter if this is just for the sake of clarification here, I'm just showing big trends here, but you can also take minor trends into consideration. If you see here, this is if you just follow with me, this is a major swing or major trend, but those are minor trends, and we can also use these trends to measure the price correction. And if you see here, it has made more than 100% correction, and so on and so forth. It's all the same. We take those ones into consideration. And if you notice here, the price has touched the 50 Fibonacci level, then went up again. And just for the sake of clarification here, so we have a downtrend here, a clear downtrend, and we take the Fibonacci tool. Let me just try to do it slowly here. We take the Fibonacci tool from the top of the butt of this candlestick wick, and we click on the left button of the mouse, and we do not we hold the button, and we take the Fibonacci tool from the top to the bottom to measure the price, this downtrend correction. And it has, for the in the first place, it has made a correction to the 61.8 Fibonacci level, went down, then went up again, and it has reached the 88 level Fibonacci level for retracement, and then went down. Let's just see, it just kept going up. It doesn't matter here, in fact, just for sake of showing you how to do this. So let's just find other examples, so it will be much more easier for you to implement this as quick as possible if you don't know how to use Fibonacci. So as I said, from the top to the bottom to measure a downtrend correction, price correction. So here it has went to 38 Fibonacci level, then went down, went up again, 50 Fibonacci level, then went down and went up again, and finally the 78 Fibonacci level has turned it to the downside strongly here, just because of maybe supply zones here. Anyways, so this is how to apply the Fibonacci retracement tool on a bullish and a bearish market, or an uptrend or a downtrend. So we move to the next step, with the high impact levels for Fibonacci retracement tool on both bullish and the bearish market. So let's just dive into, just go back to my MetaTrader 4 and show you this right now. Let me just go back to the MetaTrader 4. The high impact levels. I know that you cannot add few ones onto your Fibonacci level. By default, you will get the 23.6, the 38.2, and the 50 and the 61.8. Maybe 23. I don't know if you will get it by default on your Fibonacci tool, but I will show you how to add the 88.7 and 78.7, because those are two other high impact levels for Fibonacci, and mainly they are being formed especially with harmonic patterns. If you already know about the harmonic patterns, like the ghastly, the crab, the butterfly, and they mainly being formed and measured by Fibonacci retracement and the extension tool. And there are a good portion of people who trade using harmonic patterns, especially in Forex, and they are making serious bank. So let me just show you how to do this. When you grab a Fibonacci tool into your chart, you can just go to that line, red line, dotted line here, and double click with your with the left button of the mouse. Double click to not to edit, and double click to edit. Right click into your mouse when you do this. Right click into your mouse and go to Fibo properties. When you go to the Fibonacci properties, sucks, we cannot find this called Fibo number, I don't know. You go to the Fibo levels here, and you see the 0 level and the description. The level here you can add the 23.6 level. On the level here, just write 0.236, and on the description you write 23.6. That's for the 23 level. The 38 level is, and 50 level and 61 level are by default on the Fibonacci. As well as the 100 level, the 161 level, the 261 level, and the 423 level. Those levels are by default, but the 127.2 level is you can add, you just need to add it. So you go to the Fibo levels here where it says level, and you type in 1.272, and in the description you just type in 127.2, so on and so forth. And according to the 88.7 level, you can add the 0.887 in the level, and the description 88.7. That's all. To this, according to the 78 level, you just go to the level and you type in 0.787, and for the description you type in 78.7. There is another level here that's being traded. I really forgot which harmonic pattern that has that level. I think it's the shark or the crab. I really don't remember all the crab pattern, and it is the 134 level. Yeah, I think the 134 level. So we just type in 1.34.2 level, and here as well 134.2, just in sake, just to show you a new one. But this one is not really used, but I will just tell you how to use it. According how to change the color of the Fibonacci levels, you just on the Fibo levels here, you just go to the style and you choose the color. But for me here, because the background is gray, I just make the Fibo levels to be as black, so it will be more clear. And here you can choose the style of it, dotted, I don't know, solid line or dashed line, I don't know which kind you want. And here is the thickness, so I may choose this one, and it became thick. So the high impact levels for price retracement. The first level that we want to take into consideration is the 23.6 level. For the price, for example, here the price went down, and now it started to reverse up. If you see here this candle, let me just try to zoom in. This candle here, this is a hanging man pattern, candlestick pattern, which signals a price reversal, and it just happened to be on the 23.6 level. And if you just follow the candlestick patterns, you would have take a sell position on the next candle, and you would lose. So this is why we use the arrow to this is why we use Fibonacci as an extra confirmation tool with the binary option smart box system. And I'm not saying that it's fundamental here, but extra knowledge and experience will save you time and save you losing money on fakey setups. So here it did not respect that level, and it went strictly to the 38.8 level, the 38.2 level, sorry, and it has showed us here something like a pin bar formation, and then went down, and it's been retracing down for it's been ranging down to this area between the 38 level and the 0 level, and then it has finally break the 38 level and went to this 50 level, and then went down for a while, went up to the 61.8 level, as you see, and then boom, just went down, made a correction to the downside. So this is basically how the market is moving: uptrend correction, uptrend correction, downtrend correction, downtrend correction, so on and so forth. And to be honest, the Fibonacci level really helps you understand and point or spot where those reversals are coming in, and when they are going back up again. According to the high impact levels, sometimes, in fact, I want to talk about this in the next step, not now, but I will just give brief introduction to it right here. When they have a downtrend, especially on the news, like the NFP and other high impact news, like it has happened today on the Michigan Consumer Price Index, like the GU, I think. Where was that? on the 1 minute chart. I saw that on the 1 minute chart. Those, yeah, no, this is not the Michigan. Where is it? I think that's it. Yeah, that's it. I think this is it. Or is it that one? Really don't remember. Anyways, it happened just right like this. It went up in the first 5 minutes, 6 minutes, and then went down. Yeah, I didn't do this, in fact. So let me just get back to the USDCHF. It's better. To the USDG part, sorry, in fact. So, as I said, the high impact levels are those levels here in the first place. Sometimes the price may just make a correction to the 38 level and becomes ranging between this area, 38 level and 0 level, and then it breaks up to the upside, or whether we have a falling wedge or a triangle, descending triangle pattern. Then the price will just break the 0 level and keep going in the same direction to the downtrend. But sometimes it will make us those harmonic patterns, just like this one. I think this is a harmonic pattern. Yeah, I think it is just becoming just right like that, from here to here and from here to there, and it almost has the 78 level, then went down. Yeah. So the first ones you want to take care of, mainly the 38 level, sometimes the 23 level, especially when the market is ranging, especially in the Asian session, will respect that line, but that level. But on the US and the Euro session, most of the time the 38 level will play a major part, but the 23 level will not. So sometimes it comes ranging between these levels. Sometimes it reaches this 50 level and then retrace back. Sometimes it's 61.8 level. So when the price doesn't respect those two levels, the 38 level, the 50 level, then it will respect the 61 level. Sometimes it won't even respect the 61 level and head over the 78.7 level, and once it comes down. So those are for the retracement. In a bearish and a bullish market, they are all the same. So let me just find a bullish market to show you an example. So that's a uptrend, and here the uptrend and the correction took place at 23.6 level and went up again, and it has respected the 23.6 level. So the 23.6 level has made its has worked here, but sometimes it doesn't work. So let me just find another example just right here. So for example, that one, that uptrend, the correction took place at 61.8 level, something like I don't know which candlestick. This is not a candlestick, to be honest, or I think it's a pin bar or an inside bar. I think, let me just make sure if it's an inside bar. It's something like inside bar. So candlestick pattern, reversal pattern, and boom, going up. So basically what I want to say here is when the market is ranging, going up and down, we use support and resistance levels, as well as double tops, double bottoms, to confirm the trend reversal and wait for arrow to pop up and take our trade. And when the market becomes trending, especially on the US and the Euro sessions, the market trend is trending, even if there aren't high impact news. Just that way, those two sessions are common for being trending. So when they trend, they just make it an uptrend, so for example, and then a correction, and the correction may take place at 38.2 level, Fibonacci level, 50 level, the 61.8 level, and then goes up again. And how do we identify the next price movement, where is it going to take place and where it's going to reverse again, is we by using the Fibonacci extension level. So when we want to measure an uptrend price correction, we use the Fibonacci retracement tool. And when we want to spot where the next where the price is heading to, and where is the next reversal point, we use the extension tool. And I think this is the best thing that you want to implement away of other trading system indicators. You really want to understand the market psychology, and the Fibonacci level will help you to do this a lot. And along with the binary option system, you will be more professional than using the system all alone. And I'm not saying here that the system is not going to work for you, okay? I think I have took a lot of time here explaining things, so let's just go to the next step, and let me just show it to you how I trade the flag pattern with Fibonacci retracement. I already said that the flag pattern happens to the downside when the market is going to make another move to the upside, and when we have a flag to the upside, the market is going to make the next move to the downside. I think I have already went through this, explaining it deeply, but there is another kind of flag pattern, and is most common to be to occur on news announcements, especially the non-farm payroll. I think also the unemployment rate and the jobless claims, and especially the non-farm payroll. And I am just going to share a secret, it's a news trading secret here in front of you, that I really never shared with anyone, only one of my friends, and he's doing good and he's being successful now, and he's doing great with the news trading. And this is the pattern that happens on the non-farm payroll. Here the 1st of April was the non-farm payroll. After that it has made, so sometimes on the 1 minute charts or the 5 minute charts it makes that during the news, but here it hasn't made it on the news, and it has made it after the news. This is what I call it something like the horizontal flag. It's not going down or up, but it's horizontal, and this is what I mean by horizontal. So let me just change the color of the candlesticks to a different color, and this is what I call the horizontal flag. So the horizontal flag is coming happens after high impact news, and especially non-farm payroll. And I've been going through the charts for I have done this few months ago already, and I noticed that pattern repeating each time the non-farm payroll is released. So this happens when we have a downtrend or an uptrend. It simply happens on both trends, but it's just horizontal. It's not going down or not going up. But when you take the Fibonacci level for this uptrend from here, you find that it's just the price just kept going for a long time here, and ranging between this the 38 level to the 0 level area. And how I like to trade the horizontal flags is waiting for price to almost reach the 38 level, look for a reversal, and then I go with a trend. I take the trade if the binary option smart box system rules are met. And the same, when the price touches the 0 level, I wait for price reversal and confirm with the rules of the binary option smart box system, and then take my trade. And I keep doing this when I get this pattern here, the horizontal flag. But the horizontal flag is something like this symmetrical triangle. You don't know, it's a little bit trickier, and you don't know where it's going to break out to. Sometimes it breaks out to the upside, and most of the time it will break up to the upside, but sometimes it becomes trickier and it goes to the downside, it breaks to the downside. But on the number of times I traded that pattern, most of the time it goes to the upside, so it breaks to the upside. So let me just see, yeah, it has break to the upside if you notice here, but it has kept going for a long time here during the US session close, I think, and the next week market open. So this is how I trade the horizontal flag. We're using the Fibonacci level. Fibonacci is retracement tool. I take the according to the bullish, to the trend that I'm trading on. So here we're on a bullish trend, and I take the Fibonacci retracement tool from bottom to the top to measure the retracement. So the price must be between the 0 and the 38.2 levels in order to trade the horizontal flag, and in order to call it a horizontal flag pattern. If it does exceed the 0 level or the 38 level, then this is not a horizontal flag level. Sorry, it's not a horizontal flag pattern. So as I said, how I trade using the horizontal flag pattern is waiting for price to reach the 38 level and wait for a good setup to be valid here, and then I take my trade to the upside. So let me just get the binary option smart box system, and yeah, that's it. We have few trades here, few arrows, and if we confirm with the breakout theory, we will take only good setups here, and we'll make few good trades here during the formation of that flag pattern. So simply, the binary option smart box system is tradable within the ranging market, or even in a trending market. But in the trending markets, it will be a little bit requiring a different money management strategy, which is martingale. So whenever the price keeps going up and up and up, or down and down and down, but when it makes its final correction, price correction to the upside, to the downside, we'll have to recover on that last trade. If you, for example, if you lose a couple of trades here, but when finally it makes the move to the upside, if you take these trades here, we lose all of these 4 trades, and finally it comes on the 5th trade, you will win the trade and recover back. With the martingale, for example, you take a $5 investment here and you lose, and here $10 to recover back the loss of the $5, and you keep doubling up the investment. By the end of the price correction, you will be recovering back all the losses and make a small profit, I think. Yeah, so that's it, how I trade the flag pattern formation using the Fibonacci the retracement tool. So let's just move to the next step now. Now we will be talking about where to find the Fibonacci extension tool on MetaTrader 4. So as I already mentioned in the beginning of this video, of this course video, the extension tool unfortunately is not available on MetaTrader 4, but on other platforms like I think Thinkorswim and NinjaTrader, you will find the extension tool by default on those trading platforms, but on MetaTrader 4 is not there. And I tried multiple times finding a extension tool, and I tried myself to code the extension tool, and it's a little bit difficult. So we can use the Fibonacci retracement tool as an alternative, and I will show you how to right now. So right here we back to my MetaTrader 4 and how we use the extension tool. I already said that the extension tool, we use it to spot where the next where's the market's next move to is going to be, and when the reversal will happen. So as I mentioned earlier, when I have a downtrend and a correction, I think that's when on the US and the Euro sessions, I know that the price will be trending, and it will not it will not ranging, it will not go and switch the direction to the upside or to the downside. So on a downtrend, how I find the extension or where the price is going to is by taking, so we have this downtrend, and I want where the price, this downtrend has recovered back to the upside. So I grab my Fibonacci retracement tool and grab it from the bottom to the top of this downtrend, and be notified that you will have to, in order to do this, you will have to hold your right your mouse right button, left button, sorry, to do this. So why does it do this? So the price has recovered back for the retracement here. So let's see, it has retraced back to the 38 level and then kept going down. It has given us a pattern here that I will be explaining is in the next few steps. And here it has made another downtrend, and where it has went to the 127.2 Fibonacci extension level. This is the extension level. So these levels inside that comes between the 0 and 100% levels are retracement levels, and they are not extension. But the extension levels that are outside of the 100% level, which are the 127.2, the 134.2, the 161.8, the 261.8 as well. So here the price has went to the reached it. It doesn't require the candlestick to close here close to the 127 level. Just when it hits it and you see this price rejection. So let me just, sorry if you're not zooming in right here. So when the price has let me try to draw in some drawing tools here. Heck, let me just grab some drawing tools. So the price, you see here, the price has touched sucks. How could I take that out? Anyways, let me just get something from here, shape. So the price has touched those two levels, the 127, the 134 levels, and have made a rejection to the upside. That means these buyers are started to taking control of the market here. And when we see such a long tail to the downside or to the upside, that means the power of here, the power of buyers is accumulating, becoming stronger, and the sellers are starting to lose control of the price here. And we call this price rejection when we have such a thing, when the sellers try to take prices lower than the buyers waked up here and say, no, this is an extension level and this is a pattern that says the price must be reversed, in this case when it hits those two extension levels. So when it has reached them, it just started to reverse up to the upside. So sometimes the price will not just, especially on news, and especially when there are, I know, like central bank conferences, something like speeches, the FOMC minutes, the ECB Mario Draghi speech, those high impact news. The market just keeps trending and it doesn't respect any of the extension or even the retracement levels. Sometimes it will not respond to the 127 and 134 levels, and it will just break them and go farther to the 161 level. Sometimes another scenario that happens, and it gives you a fake reversal. Sometimes it will just do this, it will just reverse with one candle, and then you think that it's going up, but sometimes it will not reverse at 127. It will just make reversal for one candle or two, and then it will just boom, just continue going down. It doesn't respect any of these levels, and you know that it's heading over the 161 level, and then you recover back there. This is for forex traders, in fact, and you also, along with binary option smart box system, you will understand that sometimes the price will just not respond to a resistance level, support level, a Fibonacci extension level, and it just keeps going in its direction, but there will come a point where it will reverse up and you will recover back. So let's just see another example on a bullish market. Let's just remove that from here. I don't think that this is an ABCD pattern. So Another case here, another scenario here, we have this uptrend and a retracement, and then it has broken the 100% level, so we know that the price is continuing in an uptrend. And once a body closes above the 100% level with full body, that means the market is going to have that pattern, the ABCD pattern that I will be explaining more in the next few steps. And here it has reached the 127.2 level, and it has shown us a candlestick reversal pattern, but that was a fake out. If anyone relies on patterns, candlestick patterns, and tries to sell or short the pair here, he will lose. But it did not respect that, and this is due to some, I don't know, maybe market psychology may be in use here. Anyways, it just kept going and reached the 161 level. Sometimes it will reverse here, but this time again it did not respond to the 161 level and just kept going up to this 261 level. And this thing happens most of the time on news announcements, high impact news announcements. It doesn't respond to these levels, just keeps going up, but at the end it will just, most of the time when it breaks all of these three levels, it will respect the 261 level. It doesn't exceed this level most of the time. 95% of the time, it will, when it breaks all of these three levels, it will respect the 261.8 level. So that's on a bullish market. So let me just try to find another example here just to be clear. So I think I have found an example. We have this trend. Come on. An uptrend, a retracement, and price backed up again to the upside, and it has reached the 127 level, and then it went back down, and we have a selling position here, successful selling position. So it has made us almost, it is not an ABCD pattern in fact, but we'll take it into consideration. As long as the SDGBO have been shortening in the last few days, we just find so the same scenario happens. An uptrend, retracement, and went and kept going up. So as I said, the extension tool helps us to spot the next move of the market and where it's going to reverse down. So here, where it just kept going up and it did not reverse on the 127 level and 134 level, it just broke them, and when it came to the 161 level, it just respected that level and it went down. So this is when the market is trending. We use to measure the retracements, we use the Fibonacci retracement tool, and for predicting the next move or where the reversal point is going to, we use the extension tool with these three levels, and the retracement levels are the ones inside that are between the 100% level and 0% level. So the extension levels, the high impact extension levels are the 127 level, the 134 level, and the 161 level. And sometimes when it doesn't respect all of these three levels, it will just go up to the 261 level, but this is rare and it's awfully happening, and especially on news announcements such as NFP or the non-farm payroll. So I hope that I haven't been speaking Chinese here or something, and I've been clear, and I hope that you got the point here what I'm trying to deliver here. So we move to the next. So how to use the Fibonacci extension tool on a bullish and a bearish market. I think I already just showed that, but I will just, in the sake of showing you this, I will just repeat again. So on how to use the extension tool on a bullish market, we have for a bullish market we have an uptrend and then a retracement, and then the price just went going up and it has broken that that's high that it has been made here. So we know that price when the price breaks the previous high and it has making us this pattern, we know that the price is just going up and we are bullish here. So where do we find the reversal point, or how do we identify the next move of the market and where it's going to head over? So we take the Fibonacci retracement tool. As I said, we use the Fibonacci retracement tool for bullish market. We take the retracement tool from the top to the bottom, and we see where the price headed over. So it has reached the 127 and 134 levels, and it has break them and then went to the 161 level, and it has respected that level and went down. So this is the reversal point and where the price has reversed on. We take another example on a bullish market. So we just know where to find these things. So we have this uptrend here, retracement to, I think, the 78 level if we take the Fibonacci retracement, but we're not here for Fibonacci retracement, we already covered that. So the price has break above the 100% level and break that high that has been made here. So the price is moving to one of the extension levels, and it has touched the 127 level and went down for a while, and it's just kept going up. And by the way, it has taken this previous high as a support level when it has reached that area, and this has become a support resist, something like turnout resistance level or support level, something like this. And the price just went up and went up again, and it has been ranging here on the 61 level, but it has respected it for a while and went down again. So this is the extension, how to use the extension tool or Fibonacci tool on a bullish market, and we will see another example for a bearish market. Especially when this happens when the price is, when the market is trending. So let me just try this example right here. So we have to just explain this. I just find a minor swing. So the price has made a downtrend here, a retracement, and then went down again. So it has reached both 127, 134 levels, and it just went up again, but it's been fakey set up here, and it just continued going down and reached the 161 level and went up for a while, and it just kept ranging here, in fact. So let's just find a better example here, so it will be really helpful for you, not confusing. That's a good example. That's a good example. A downtrend and then a retracement. Retracement to the upside, then boom, just this candle has closed below that low here with full body candle, and we are now bearish. So we are bearish. The candle just crossed and reached both levels, 127, 134 levels, and then it just reverted up for a while. So this is how we make, this is where we spotted the reversal and where the price has just headed over. And I don't recommend, this is for forex traders, in fact, just if you want to learn the forex trading, I don't recommend that when the price just touched almost reaching those levels to sell. You will not make it. Sometimes you will not make it. So the price has reached those two levels and went up again. If it hasn't respected those levels, just continued going down, and when it has reached 161 level, it will just reverse up again. So how to find how to spot the bearish market extension point is by taking Fibonacci tool from bottom to the top of a trend, of a downtrend, and taking it from the bottom to the top, while the bullish market we take it from the top to the bottom. The bearish market we take it from the bottom to the top, and we find the extension levels or point for the price here. So we go back to explain the next point, which is the high impact levels for Fibonacci extension tool. I already just explained these high impact levels for the extension tool, which are the 127, the 134, the 161. And if the price just break all of these three levels, it will just go to the 261 level and it will reverse from there. And again, when the price reaches the 127 or the 134 level, it may reverse, it may break these two levels, and when it hits the 161 level, it will just reverse from there. So we move to the next step, which is how I trade the ABCD pattern with the Fibonacci extension tool. Now the ABCD pattern is kind of something like the other harmonic patterns, but it's most of the time you find that forex traders will recognize consider ABCD pattern as a part of the harmonic pattern patterns trading. So, and in the live training videos, I will be introducing you to harmonic patterns, as if you spot a harmonic pattern on a chart, even if you are trading binary options, you will know that you cannot maybe continue in an uptrend or a downtrend. You know, it's just this pattern has just been completed and we will reverse down or up, something like this. So the ABCD pattern is very easy. So let's just jump into my MetaTrader 4 right now and show you this pattern, how it works. So the ABCD pattern is tradable with the Fibonacci extension tool, and in this example I will just show you this in this example that we already saw here. So we take, as I said, the extension tool, we take it from the top to the bottom. For bearish market, we take it from the bottom to the top, and we take the Fibonacci retracement tool from here. So the price, we know that the price has made a downtrade here and then made a retracement. This retracement really doesn't matter. The most thing is that it must be at least almost 120, the retracement must be almost at the 23 level to call this a ABCD pattern. This pattern happens a lot of time on the trending market. Okay. So the price has reached 123 level and went going down again. So we have this pattern going down. So how do we know where the price is going to reverse up again? Very basic. This is the ABCD pattern. This is the point A, and this is the point B, and this is the C point, and we want to find or spot where the point D is going to be. So we make the extension with the ABCD pattern. We use the extension tool, Fibonacci extension tool. So for this example here, we are on a downtrend, so we take the Fibonacci tool from the bottom to the top, and when the price just kept going down, it just hit the 127, 134 levels and went up again. So when the price we know that the price will just hit these two levels, and it may reverse, it may not respect these two levels, just goes to the 161 level, but we know that the reversal will come in one of these three levels. If not, it will come at the fourth level, which is the 261.8 level. So this is the ABCD pattern on a bearish market. So let's just find one on a bullish market. The ABCD pattern is very easy, something like a downtrend, for example, then the retracement. Let me just draw it good, and then just the price just goes in the same direction. Just so here is this retracement, just taking a breath of selling, and then the sellers preparing their trades to the downside again. And how do we know where the price is going to reverse when it just continues going down? Is by taking Fibonacci level from this first downtrend, and we look where the retracement will be, where the reversal will happen on the extension levels, which are the 127, 134, 161, 261, and the 423 levels. So sometimes it will hit these two levels here, the 127, the 134, and the reverse is up. Sometimes it will not, and will just continue going to the 161 and then it will reverse. If not, it will just go to the 261.8 level, and then when it goes up again. But it's also the length of the previous trend also plays a major part here. So if you have a big downtrend here for with 1,000 pips, then we expect another 1,000 pips, at not 1,000 pips, but 800, 750 pips to the downside, then the reverses will happen. But if we have a downtrend with 50 or 200 pips or 161 pips, and we make a retracement, and then it goes up, goes down again, we know that the extension may happen at 160, 160 pips, maybe 200 pips, maybe 210, 220 pips. It's just like this, and it won't be longer than the previous trend. So this is it. So let's just find an uptrend here. Example here, I think we have a minor one. Yeah, we have one here. So this is an uptrend. Okay, an uptrend, taking breath off, making a retracement, and you know that the psychology behind this, I already explained that. I don't remember which video, but the market, this is the psychology of the market, an uptrend, and then because some traders will join late here in this candle formation, they will just buy, they will just open buying positions. And when the price is, so the psychology of the market is to take these late traders' profits and turn them into losers. So the other traders who joined earlier here in the trends, first signs of formation, they will be profitable. And you know that 90% of the traders in the forex markets are losers, and the 10% are winners. So make sure that you're always on the 10% side. Okay. And the price will just continue to make us the ABCD pattern. This is the A point, this is the B point, this is the C point, and this is the D point, and we want to identify where the B point is going to happen. So the price will just break the 100% level, and when we want to wait for it to reach the 127, 134 and see if it's going to reverse there. So here in this example, it just reversed and respected those two levels. As I already mentioned, let's just measure the pips of this first trend here, 278 pips, and let's measure this one is here, 290 pips. It's not a big difference, and as I said, the extension will happen depending on the previous trend's lengths. So here 278, I think. So it's 200. So the extension was at 290. It's not a big difference. I think to 12 pips only. But if you have 1,000, the first trend with 1,000 pips, then expect the next trend to be long as well. Don't expect it to be at 200 pips only. It will not work. Okay. In this example, as I said, it has respected 127, 134 levels, and the price just went down. And in fact, this has made us a harmonic pattern that I think is a cipher or something, or shark. To be honest, I don't like to, even for candlesticks, because it's been 2 years since I tried to remember all of these names, but because I am more experienced now, just when I see something, I know that this is a reversal, something, a continuation pattern. I know that this is a harmonic pattern, but to be honest, I don't remember which name is this, and this is it doesn't matter in fact but for me I think it will be here, something like this. Sucks. Anyways, I will be covering a lot about the harmonic patterns in the live training sessions. And here if you see, again, this is another harmonic pattern. If you just when you will be experiencing it, you will just find these patterns so easy and quickly, and boom, the price reversed down. You see this? So you see where the reversal, the take profit was. So we, most of the time, we harmonic patterns traders, we take 2 levels, the maximum 3 levels of take profit. So the first level will be something like 38 here, retracement. The second will be at 60, the third will be at the second at 50, about 50, the third will be at 61, and if you are lucky you will be but most of the time the market will not make it to 78, but sometimes it will make it, and you will always regret that you did not take these other pips profit here. So sorry for distracting you here with harmonic patterns, but I'm just full of life, and I want to share every information I have. And I hope that the training, you will enjoy the training sessions with me, because you will have to be genius to save all of these information that I will be sharing here. I think let's just go to the next. So the next step is thank you for watching the whole video, and I'm sorry if I had taken a lot of time from your time here, but I really want to explain things simply, but I don't know if I just spoke in an advanced way, but it's a little bit difficult when you will be a professional trader and you want to teach newbies. And I'm really doing my best here to try to simplify things for you. And in the training sessions, I will make sure that I will be holding the sessions for a long time, for 2 hours or so, and you will be there free to ask any question and repeat what I want to say and repeat the explanation, so we'll get the whole point. So this is the last training bonuses, and in the next bonus it will be how to join my VIP trading group, and where and how I'm going to give you the live training and trading sessions. So make sure to go through all of these 2 bonuses videos, so you know how things will work, because I really don't like to repeat myself a lot and answer everyone's questions. This is why I have designed this content here, this membership area content here, just to make things smooth and easy for you, and not to have you always asking me and answering, and maybe I won't get anyone's view messages. So that's a lot of taking of your time here. So thanks for watching, and see you in the next bonus.